All right, what's up, people? Hope you had a good week. Hope you're having a good weekend. Let's jump into the Sunday prep. So, usually, in the market and as traders, you kind of just go about steadily compounding the account. So, I think maybe there's 2 to 3 times a year, and of course, every year is going to be a little bit different. But generally speaking, there's about 2 or 3 times a year where everything is lining up for a potentially nice pitch. It's that moment in time where you can get a little bit more aggressive. It makes a meaningful progress in your account. So I think we are at one of those moments in time, and it starts with the weekly squeeze in the Qs. So, important concept to understand as a trader, as goes the market, goes the individual stocks. So, the fact that the QQQ and the S&P 500 are lining up in a weekly squeeze, that already leans towards, a good probability of a lot of stocks across the board making a solid move. As an example, a lot of opportunity as of late. And a lot of that opportunity came when the Qs and the SPY were lining up at the 21 and the daily squeeze. And ultimately, as that daily squeeze fires, get some really good momentum across the board. So same thought process with the weekly squeezes. I think we got a good 2 to 3 to 4 plus weeks of really solid momentum. And because you got a weekly squeeze here lining up for the Qs, we got a weekly squeeze here lining up for the SPY. You want to look for similar structures in individual stocks. So some of our bigger trades in the options room, they were daily squeezes on Google, Tesla, Amazon, and they were such good trades because you had the daily squeezes in the indexes. So now that the daily squeezes have fired and we got the weekly squeezes setting up, take a look at a couple here. So, Nvidia is a good example. I think this is a solid weekly squeeze. Stacked moving averages, green 10x bars, your histogram is positive. So a beautiful weekly squeeze, and you're setting up right at one of the buy zones, that 8-period moving average. So I love me some Nvidia. My favorite is going to be Amazon here. So the Amazon weekly squeeze, which has been forming since last October, you got the moment in time here where you got the good-looking squeeze on the individual stock, but most importantly, you have the market behind it. So even if Amazon wasn't in a weekly squeeze, important concept. If the Qs fire their squeeze, Amazon's probably going higher. So is Facebook, Google, Microsoft, Apple. Because of the structure of the indexes right now, if those squeezes fire long, you're already probably going to see Amazon go higher. The fact that Amazon has its own weekly squeeze, that just further adds to the probabilities. So that's the bet I'm placing here, or the move I'm looking for rather, is that over the next 30 plus days or so, the Qs fire that weekly squeeze and Amazon can do the same thing. So we do have earnings next week, which I will be holding through. Let's talk a little bit about the trade here. So I do got a couple different positions on, but we'll talk about the one we took in the options room. And I love all the questions I'm getting about this week. Keep in mind, it's just a trade. At the end of the day, it's just a trade. So because you got the squeeze in the Qs, you get the squeeze in the SPY, and then Amazon's got the weekly squeeze as well. This might be one of those moments in the year where you got a big pitch coming up. So what I'm trying to do is find a way to potentially, if this trade unfolds in my favor, make it a big, meaningful trade, but also structure this trade in a fashion where if the squeeze goes to crap, I can live with the results, where I can, take an amount of risk I'm comfortable taking. So what I've done here is an in-the-money put credit spread. A little bit different than my usual trade. Usually I'm going to do the out-the-money credit spread, looking to risk 2 to make 1. Because of the big squeezes here, I'm looking to get a little bit more aggressive. So what I was able to do was, take a level of risk I'm certainly comfortable seeing go to 0, but because I'm selling in the money strikes at 3,500, I'm flipping the risk reward in my favor. So simply, I'm placing a bet that 30 days from now, Amazon's going to be trading above 3,500. So what I did was, May 21st expiration, 3,500 by 3,490 put credit spread. Now in my account, I sold 38 contracts, and we got filled at 675. So the risk reward here, max loss of 12,000 for a max profit of 25,000. So a couple different pieces on, but that's a trade I want to focus on. It's the complete opposite risk reward of my usual trade. Usually, I'm a risk of 25 to make the 12, or a risk reward of that structure. In this instance, I'm flipping things in my favor. So all we need here is a move above 3,500, and if we can hold above 3,500 as we approach expiration, you're collecting a lot of premium there. Of course, this trade does not work if Amazon doesn't get above 3,500. So that's a trade I've placed here, but really it more so just comes down to the mindset. We have the timing here where the market and the indexes themselves are setting up in that moment in time where they're potentially getting prepared for a nice move higher. So if you can find a similar structure in something like an Amazon, and then you can place a trade where if it works in your favor, you're going to make a significant return. All things being relative to account size. But at the same time, if it doesn't work, you've put a level of risk on the table you're comfortable taking. So that's what we got with Amazon. Earnings is coming up this Wednesday, so get your popcorn ready, get your whiskey ready. That should be interesting. But that's a decision I made, is to hold through earnings. A couple more things I like here. We covered the Nvidia weekly squeeze, so I'm keeping an eye on Nvidia. Google has earnings in a couple of days too, so I'm not trying to get too many positions here that I'm holding through earnings. So I might ignore Google, but unfortunately this looks beautiful. Daily squeeze is fired. We're holding up here at the 8 EMA, and check out that 4-hour squeeze. That is sexy. So it's going to be tough for me to not trade Google, but I got to let that one go for now. But for Nvidia, let's check out this one. So I like the big picture weekly squeeze here, and you got plenty of time till earnings. Earnings isn't until May 26th. That's solid. So with the weekly squeezes in the market in the weekly squeeze here, I think you got the potential of seeing some more upside for Nvidia. And the daily squeeze fires, you hit your 2 to 3 plus ATR extension, and you're coming back towards the 21, kind of holding up here at the 8 EMA. So if we're near the buy zones, can we get a lower time frame squeeze to focus on? And you got a brand new 2-hour squeeze. Let's see. There is kind of got a 1-hour squeeze. So I should be doing a course here for Simpler in a few months. And the whole focus of that course is going to be high probability setups mixed with high probability entries. So, a little preview, what we'll be focusing on is finding the bigger picture squeezes, waiting for the stock to set up here at a buy zone, and Google's a better example here. But then at the buy zone, looking for those lower time frame squeezes, because if those lower time frame squeezes can start to fire long off of that buy zone, it can really kick off some momentum. Now, here's another good example, is that, Amazon's last $300+ move, you had a bunch of squeezes taking place over here, and those squeezes are taking place at that daily buy zone. So if we go look over there, you're right in the daily squeeze. You're right near your 21 EMA. So you had an hourly squeeze that fired, a 2-hour, and ultimately it was that big 4-hour squeeze here, which led to another $300 move. So hey, if Amazon could do the same again here, I ain't going to be complaining. But this trade will be interesting, so I'll keep you posted. Rest up this weekend, spend some time with family. And if you haven't already, hit that subscribe button. But as always, I appreciate you watching. And just keep in mind, earnings can be interesting. Not just as far as, trading Amazon, but also the impact on the market. Heavily weighted names, Amazon's, Google's, Apple's, Facebook's, etc. They start announcing earnings. As good as the market looks here, it is the reality that if those stocks decide for whatever reason to bomb after earnings, things could get a little bit messy. So, hey, at the very least, take that into consideration. But I'll talk to you next time. Peace.